Hello, this is Jim Harris, owner and one of the senior loan advisors at Trusted Advisors Mortgage. This video is about advertised interest rates and how they don't really give you the best information to make a decision. So shopping for a loan by looking at advertised rates in newspapers and on the internet can be a bad idea. And there are three key reasons why. So the first is that disclosure laws that we work with in this industry don't require that every cost be disclosed to you up front. There are fees which don't get calculated into APR, annual percentage rate, and please see that video, by the way, to understand that number. It's really important. There are fees that don't always get included in APR, and APR is what is advertised in the media, newspaper, and on the internet. So lenders won't genuinely tell you all those costs until they provide you with a document called the GFE, the Good Faith Estimate. It's at that time you see the true cost of doing this, as well as the cost of getting the loan, and the cost of credit, as we say. Number two reason why advertised rates aren't always a good thing to shop by is because of assumptions. So the lender is going to always assume the best case, best credit score, best assets, best financial situation for you when they're quoting you rates. Now, in reality, when we start to look at your data and your individual situation, as well as what loan program you want to try and go for, rate will change. And so the rate that you see in those ads is not correct. The brokers, again, will assume the very best case scenario to give you the impression of low rates, but it doesn't really matter until they start talking to you in detail. Third reason why rates are sometimes misleading: lenders in their advertisements will use lots of catchphrases. No points, no fees, no cost loans, all kinds of different things. The reality is that you will pay for this service and for money in the long run. So you need to understand why. There's always a way that a lender will catch up on the back end to get their fees and their commissions accounted for. We show you all of that. You see every nickel and dime that passes through this process, the different companies, as well as us when getting a loan. So again, picking a lender based simply on advertised rates is doing yourself, your family, a bit of a disservice. Those rates really depend on some good conversations. And it could cost you several $100s or several $1,000 if you pick the wrong broker. In fact, we had a case a couple of years ago where, by reviewing a GFE provided by a builder's lender, we figured out that the borrower overpaid by $21,000 to get their loan, which is crazy. We could have saved them $21,000 had they come to us initially to review that GFE. The only way to get a clear picture of that GFE, again, is to talk to Good Faith Estimate, is to talk to several lenders and brokers that you trust. If you don't know where to start, give us a call. You can shoot me a text message directly or a call at 916-801-3940, or you can send me an email message at jim@trustedadvisorsmortgage.com. Hopefully this video is helpful and does a pretty good job on why you shouldn't shop for a loan just based on advertised rates. Again, there's lots of conversations and nuances that you need to understand. Give me a call if you have any questions, and thanks for watching.